Good evening, I'm Giuseppe Basile. I'm the analyst trader. You can find at the website www.vipstalker.com. I also post regularly on Twitter using the @vipstalker nickname. Good evening, today is Monday, October the 13th, 2014, and I'm preparing the newsletter for you with 1 day delay. Today is Thanksgiving, and I want to wish happy Thanksgiving to you, to all the people who actually celebrate it. In this video, I'm going to review for you the 12 markets I follow, and this is the video that I usually attach to my free newsletter. If you want to receive that newsletter, you just go to my website here and you subscribe for free. Now, I also want to take the opportunity to mention my Vipstalker Methods coaching program, and the new enrollment for December is going to come very soon as next week. The participants and experience in the current coaching program has been, above my own expectations, and the same is for the participants who are giving me very good feedbacks, and some of these feedbacks are in the newsletter. You can read them. So I'll come to you, and I have a lot of people who are interested. I had to move also some of the people to the December session, so if you want to take advantage, I'll have an early bird discount for you, and the price will go higher the last 2 weeks of the program due to the very high participation. Okay, so let's get into the analysis of these markets here. So those who follow me know that I called on October the 1st a potential bounce in the euro dollar, as well as a number of other currencies that trade against the dollar. And the reason for this, the prompt for this, was actually a failure of the sequence of measure move lower here. And you will remember that I've also called some of these trades in the live analysis room, which is actually nicely hosted by Dale Pinkert. And you remember that I've called on in September the 16th this move lower. It was up to 10 reward to this trade here. If you timed it around 129, 130 area here, and after that we saw the sequence of measure move failed, and I've indicated one of the failure was at this 126.98 here. And after that we saw this market actually retracing, and then today on Monday we already seeing the Tuesday bar here, but on Monday the market continued higher. So where this market can continue, the market can actually continue in all the way halfway back into the 130 level again. That's one of the levels I'm watching, and there are some reasons why I picked these anchors to trace this retracement, and I do this based on the rules that I teach in the coaching program. So if you are interested, you can actually send me an email with a request for information. I'll be very happy to provide additional information to you. So let's move to the SP500 mini. I know that for some people it was quite disappointing. What you see on the screen is the daily data of the continuous contract aligned to the December 14 expiration, and you will remember that last week I mentioned an important level. There was an extension long from previous levels here, and that was from highs to highs. The previous measure move here was actually hit the first target to the tick almost, and then start retracing. So it was only natural to consider the same anchor, and in fact it has been used twice by the market. And the first one was when this level, the 1920, was touched once, gave a 3-day trade, and then retraced and eventually stopped out. But when you get a 3-day trade, you don't risk anything, you just close at break even. And again, it could be timed again, and it went high again, another 3-day trade here, and then the market came back. So Some people are saying, this level did not hold. Yes, it didn't, but actually it gave a free risk trade, and that's what we have to do as traders. As traders, we have no control on the market. We cannot know what is going on really. So the best thing we can do is to actually try to identify the levels that where we can see participation, where we anticipate participation in program trading, and then get a free risk trade. If this market continued higher, it would now be on its way into 2050. That's not the case, so we'll need to identify the new area of support. But I want you to understand that in order to be successful in the market, you have to trade the market in a certain way. You have to follow some rules, and you have to have some risk and money management rules in place, which are very simple indeed, but you have to follow them. So that's the way at least I trade the markets. Now, in the past, we also see another measured move here, which was from these lows to highs, and as you can see, it participated this at 1882, and market went higher but couldn't make it into that level, and now it's retracing, and actually it's putting in jeopardy this new area of support here. So what's the meaning of this is that this is a second retest of the same level, and we know that second tests are dangerous tests. So at the moment the market is actually moving lower, and we will need to see where this is going to retrace. Now, we always have to remember also that in the market we have different participants, and clearly here this market was picked up after trading longs around 1920 here, was also picked up by shorts at 1966, 1967 here. And as you can see, this measured move actually pressing to first target, that is now actually putting in jeopardy this area of resistance, because the second target 1859 is actually below this stop area here, this stop level here. So it means that we have to be ready to see where this market can actually, what this market can actually bring to us. So let me add some data here, and we will see where actually this market could actually be picked up. Let's remember that in 2009 we had this low, and then we had two measured moves, traditional measured moves, one from this low and then again from this low. So actually this identifies a new anchor that we must take into consideration now. Although this would actually represent a very deep retracement, one of the retracement we have to consider is into the 1650, which is a very deep retracement. Will the market get there? We don't know that, and we have different ways of looking at the market. Of course, there are other anchors that could come into place, and we actually don't know whether these anchors will, which one of these anchors will actually work. So another one would be the anchor between the highs we saw in April 2013 here. May 2013 to highs, and this would be a shallower retracement into 1830. So the next level of support is going to be 1830, and those who follow me know that we have our fib stalking technique that allows us to test the area of support and resistance procedurally, and that's something that you learn if you join my fib stalker methods coaching program here. So for now, nothing to say in this market. The next level of potential support is 1830. Again, remember that those who trade 1920 here took free risk trades, so they had nothing at risk as soon as this market started moving higher. Moving to the dollar index, I will only mention the fact that this market went to test our second and larger area of support here, resistance here, and that was traced from the highs in 2008 to lows in 2011. And as you can see, there was a reaction right at that 86, 82. So now where this market can go? This market can retrace all the way into the next extension long, and that comes from highs to highs here, and that level would be the 84.10 level, as I already mentioned in the past. Moving to gold. Gold is on top of this area of potential support here, and you know already that it broke the sequence of measure move lower here. So let's go in, and I'm going to show you this sequence again. That's what you learn when you get my training coaching program. And we had an initial measure move here at 12.96, which we're pressing to first and second target, and eventually this market kept trading in extensions. Now the next canonical extension did not work, and it was in fact another level that we had to consider, because this market actually retraced into the 12.78, and so the next level really came from these lows, and it broke price into first target here. As you can see, the first target was 12.13, and then the market retraced again into the next measure move in this sequence. And that's the way we trade these markets. Actually, we know where program trading is participating. Broke price again into the first target, did not make it into the second target, and there were now different way of looking at this market. And you know, the less aggressive would have been the next measure move, which broke eventually last week here, as we can see on Thursday. But there were also other way more aggressive to look at this market, also in the smaller time frame. That's something that I show to my coaching program subscribers. Moving to the US dollar versus Japanese yen here, congratulations to those who took my trade here. It went into the first target, and now the market did not hold on that level that I showed you last week, which was from highs to highs here. There was a little bounce there, because of course there was program trading participating there, but then the market, this level, the 107.20, was actually broken, and then this is showing us a number of potential level. One level of support would be the extension long on this move higher, that's 106.57, and but of course there are a number of other levels that we have to take into consideration. This market is still in a move long, so what we're seeing at the moment are retraces. So the first one could be within 106.50-60 area here. If we break below 105.63, there'll be another level here, and a lot of people will say this is previous high. It's not previous high, it's actually a level, an area, and the beginning of an area of where program trading will participate, because program trading follows rules that are cause effect, so it does not consider previous highs, as normally we would identify the supply and demand and price action methods will identify them. So this is for the US dollar versus Japanese yen. Euro versus Japanese yen is showing the euro is showing much more weakness compared to the Japanese yen. Now there could be a reaction higher here from within this area of potential support. As we can see, we also had likewise the SP 500 mini futures here. We have participation on the although halfway short here, full back short, and only if the sequence of measure move lower into this area of potential participation long will break, we will actually start a move higher. So that's an analysis I provide to my subscribers, and we need to identify what's going to happen here. At the moment, this market is within an area, previous area of support. Although it broke previous lows, doesn't mean anything, because if the sequence of measure move lower breaks here, this market is in longs again, which means that the participation we are seeing at this level is actually has the potential to bring price higher. Moving to the pound versus Japanese yen, the pound has been weak as well, like the euro, and went all the way into this halfway back from lows in beginning of February 2014 to highs we saw in September, mid of September here. And now again, same story. We need to see if the sequence of measure move short fails. So that's the application of the fib stalking technique, which is my proprietary technique to test area of potential supports like this one, 171, 172.25. If the sequence of measure moves short into this area breaks, then that's an indication that the participation at this area is strong enough to keep pushing the price higher. If not, we have to consider that we touch the first level of the first target of this measure move. So there is also a potential for this market to come all the way into the next measure move, which would be 168.71. But still longs are intact here, weekly longs are intact, so there is nothing to fear about this. And of course it's always good to take profits, some profits at the first target here. So this market is still looking higher, although there is this strong and deep correction here. Moving to the euro versus the Canadian dollar, you will remember that I mentioned the sequence of measure move lower here, and at some point we knew that there was a violation of the sequence of measure move. You remember this extension move here, 147.11, broke price into first and second target, and then after that we saw a violation of the next measure move in the sequence here. The market tried to program trading short tried to pick the market here on the short side. It also gave a free risk trade, but eventually broke this 142.72 level. And when the market came down here the next time, also gave a new entry long. This level started 142.27, was respected once again as a short, but the fact that 142.23 here was broken on the upside meant that the algorithms that push this market lower are no longer interested in pushing this market lower. So when we see this continuation lower, that's the smaller time frame that is pushing lower, price lower, but the bigger time frame is not interested in pushing lower these prices anymore. So that's the reason why we are now seeing this market eventually picked up. Now, timing this market would have required patience, but eventually when you time it and get a free risk trade, every time you get a free risk trade. So it means that even if this market comes back and stops you at lows, you don't lose anything. You just lose your cost of doing trading, which is the cost of transaction if you use futures, or the slippage. But then when you're able to time it again and again and again, you eventually come out with a very high reward to risk trade. So that's the way I trade the markets. You have to be patient and you have to be there, and you don't have to necessarily time this on the 15 minutes. You can also time this on the 4 hours. So if you're a swing trader, you can actually benefit from this market. Next is the pound versus the US dollar, and you will remember that I mentioned since when we were here there was a nice beautiful sequence of measure move short that was actually broken by this continuation higher into the Scottish vote here, and then eventually I mentioned that 160 was the level that I was looking for. So we got a reaction from the level, free risk trade. Now the market is coming back, that trade is still on, and there is a possibility to take another trade long here and get another free risk trade here. So where this market can go, if the euro, as I anticipate, will correct, this market has all the possibility to go all the way halfway into 165.72, and that's the level where I would see this market in the coming weeks. Moving to the Australian dollar versus the US dollar, this market also broke the sequence of measure moves. That sequence was very, very clear, and although we didn't have any support below these prices, I mentioned the fact that the break of the sequence of measure move short would actually give us a good sequence of measure move higher. And actually all these markets, they're actually all trading in unison, at least those larger currencies that trade against the the American dollar. And we saw price moving above 87.76 here, and then break this sequence. That was the indication, and now the shorts were not interested again to push this market lower. Then price went to the first target, the potential for a move higher, and then the level was retested. But the main point is that every time you time these breaks, you can get a free trade, and that's the most important thing. And sometimes you want to follow the method, so you trade on the short side and you can trade on the long side as well. So and get free trades in both directions, so that wherever the market goes, you always make money and you're stopped out at break even in the other direction. So that's the way to go in the markets and to play the market in defense. The US dollar versus the Canadian dollar retested again that important level, the 12.40 45 level, and we saw resistance at those levels as anticipated. And when we look at the weekly time frame, that resistance level 12.50 here, it's very clear. It's the all the way halfway back from highs to lows in 2009 and 2011 here, and it's acting as a resistance again. So there was an indication from price discovery that we performed studying the sequence of measure move higher, and I mentioned that this sequence of measure move higher was not healthy because it did not actually follow the sequence. So what can happen now is that we could see this market correct from here, and once the sequence of measure move higher here fails, then we will see this market getting into the next level of support. That's the low, that's from the low to highs, that would be 109.45, and that could be the where we see this market as the US dollar corrects into its next level of support. Finally, New Zealand dollar versus US dollar, same very similar situation here. This market also went to test an important level of support, which was acted as a support before the 0.77, and break the sequence of measure move higher. So on this larger time frame, the daily time frame, there is the potential for this market to move all the way into the 0.8855. That would be a first area where I would start looking for shorts again here. Now, of course, this area can be broken. If that's the case, then we will see an all the way halfway back retrace here into the higher 82.71. So it's possible to time the first time this moved lower. There were different ways of timing it, but on the daily time frame, using some of the patterns I use, and that allows me to identify anchors that are typically used by program trading. Also on the 4-hour chart, it could be timed, and on the 15-minute chart. So in all cases, it gave a free trade, and now we are actually trading this market higher. So this is it for this week. I hope this review is interesting for you and it's useful. Some people actually made money on some of my recommendations. With that money, they paid for the coaching program. Again, I will be providing you with information about the enrollment for December. This is coming soon. I'll have an early bird discount. If you want to take advantage of it, do it, because the price will be hiked, will go higher before the beginning of the enrollment. So thank you very much for your attention. I wish you a great week, trading and non-trading week, and happy Thanksgiving. I hope you spent this day with your family, and thanking for the good things that we get in life, and for the help we get in life. Thank you very much, and have a great evening and trading week. Bye now.